Recently, over the past 24 hours, USDC has depegged, and it has a lot of people really nervous, really freaked out, wondering, is USDC going to zero? And at the same time that USDC has depegged, a lot of other stablecoins have also depegged, and a lot of people are just kind of wondering, what is going on right now? In this video, I'm going to go into all the details of what's happening right now in a way that even a third grader could understand it, and explain exactly what's going on with USDC and the other stablecoins that have depegged, and what's likely to happen next. And this video is going to be a little bit different than normal because I'm having to rush it out on a Saturday, so give me some grace for it not being maybe as clean cut as normal. Let's start all the way at the beginning. All of this began with a bank called Silicon Valley Bank. They are essentially a very important bank with deep ties to the venture capital and startup space. Lots of startups store their cash with Silicon Valley Bank. It's kind of like a badge of honor in, the startup realm to be like, hey, I work with Silicon Valley Bank. And so they don't have to say Silicon Valley Bank a million times in this video, I'm just going to refer to it as SVB. And the way the banks work is that they take deposits from customers, and then they take a portion of that deposit and they go and lend it out to make money. So if you deposit $100 in a bank, they take, let's say $70. I don't know the exact amount that they take, but let's say they take 70 of your dollars that you've deposited into the bank, and they're going to go and they're going to put that to work. They might loan it out to somebody who maybe needs a mortgage for their house. They might put it to work in treasuries or bonds. Whatever way that they do it, they're taking your money, a portion of your money, and they're putting it to work somewhere else so that it can make more money and they can take the profit that your money makes. And that's how banks make money. Meaning at any given time, banks don't actually have enough money to cover all the withdrawals if all their customers were to come to them at the same time and say, hey, we want our money back. If they all came and they're like, hey, we want our money back, the bank would be like, I'm sorry, I don't have your money. I spent it. They didn't spend it. I am using it to make more money, and it's going to take me a while to get that money back. And again, it's important to really emphasize this isn't just SVB. This is every single bank in the US. In the US, we operate on something called fractional reserve banking, meaning when you deposit your money into a bank account, they take a portion of your money and they put it elsewhere so that they can make money. And basically, the long story short is that SVB had a ton of money in their bank. Like a ton of startups deposited money in their bank, and they're like, oh, we need to put this money to work somewhere. So they took a bunch of that money and they deposited it into what's considered extremely safe 10-year bonds. Well, as the Fed has been hiking interest rates, this is for a multitude of reasons caused startups to need cash. They have had to go to the bank and say, hey, we need to withdraw more cash for, X reason. And on top of that, at the same time, because of the interest rate hikes as well, the bonds that SVB had put their money into started losing value. So suddenly SVB has all these clients come to them and say, hey, we need cash quick. And SVB, they stuck all their money in these 10-year bonds that are now losing value. So it's like, okay, we can withdraw money from these bonds, but we're going to take a big hit on our books because those have lost value. It'd be kind of like the same thing if you bought Bitcoin or Ethereum at $1,000 and you stuck a bunch of your money into it. And you're thinking like, I won't need money anytime soon. I got a job, blah, blah, blah. But then, Ethereum went from $1,000 to like $800 or $900. It's not quite as extreme as that, but like for the purpose of this example, Ethereum went from $1,000 to $900. Okay, suddenly you lose your job. You need cash. So you got to sell your Ethereum, but you don't want to sell it because it's at a loss. You bought it at $1,000 and now it's only worth $900. That's kind of the situation that SVB was in. They had their money stored in these 10-year bonds and they didn't want to sell it because they would be selling it at a loss, but they needed the cash because people were asking for their money back. So SVB does what they have to, and they end up selling $20 billion worth of bonds, taking a $2 billion hit in the process. And people looking from the outside in see this and it scares them. Why would SVB take a $2 billion loss? And in their minds, the only reason that they could see SVB doing this was because SVB was extremely desperate. Things were really bad. And this caused people to freak out and say, oh my gosh, we got to get our money out of SVB as quick as possible. So this caused more people to start withdrawing funds from SVB, which caused SVB to need more funds. And it created this vicious cycle that just caused an all-out meltdown at SVB and, kind of put us in this horrible situation that we're in. And eventually, because of all this, the government steps in, they stop withdrawals, and they start the kind of recovery process to get this whole thing figured out? Well, one of the startups who held cash at SVB was Circle, the issuer of USDC. 3.3 billion of Circle's $40 billion of reserves was held at SVB. And USDC is a fully collateralized stablecoin, meaning every token is actually backed by $1 worth of real world value. So when Circle suddenly loses access to $3.3 billion of the reserves, suddenly USDC is no longer fully collateralized. It's under collateralized. And this causes people to freak out and think, oh my gosh, this whole thing's going to collapse. And they start selling off their USDC, causing a depeg event. And a lot of people are freaked out because in their minds, they're thinking this is another UST Luna situation. UST was the stable coin from Luna that famously lost its peg and then essentially went to zero. And if you don't know what a depegging event is or a peg is, all that means is like when a stable coin is supposed to always stay at $1. So when a stablecoin goes below $1, it's depegging from $1. It's going below $1. It's now not worth $1. It's worth less than $1, which violates like the core tenet or the core purpose of a stablecoin, which is always to remain stable at exactly $1. However, UST was very, very different from USDC for a multitude of reasons. The biggest being that UST wasn't a fully collateralized stablecoin. It wasn't even a partially collateralized stablecoin. It was what's called an algorithmic stablecoin. And its value was backed by not real world assets, not US dollars, but by Luna, the token also issued by the company that owns UST. So when UST depegged, Luna was sold to try to restore the peg. So it went down to 90 cents and they're trying to get it back up to $1 by selling Luna and then buying UST to try to push the price back up. The only problem was Luna's value is inherently tied to the value of UST. Put simply, when UST became unstable, so did Luna at the exact same time because their values were tied together. They're issued by the same company and they're inherently valued like as almost a similar asset. They're a like kind asset. So when the price of UST drops, so does the price of Luna. So the asset that was supposed to back UST couldn't back UST because their values were fundamentally tied together. And when one went down, so did the other. And that simply cannot happen with USDC. The USDC is backed by essentially the US dollar. And when USDC is unstable, that does not cause the value of the US dollar to be unstable. That would be, of course, ridiculous. And so that value is still there, fully able to back the value of USDC, even if USDC isn't stable or depegs. So back to the current situation. Circle had in SVB $3.3 billion, and $3.3 billion accounts for roughly 8% of the total reserve backing of USDC. Now, it's important to remember that $3.3 billion isn't gone. That money that isn't like lost somewhere, and SVB didn't lose that money. That money is just tied up in 10-year bonds. And as the government takes SVB through the recovery process, the FDIC will pay out what they believe to be the recovery value of those assets to all these companies who held assets at SVB. And this could happen as soon as next week. And as Mark Cuban states here, it's likely that we see a recovery rate of 50% or higher given the quality of the assets on hand. That would mean that worst case scenario, USDC would be backed by 95 cents on the dollar. And that's if Circle's only able to get 50% of the cash that they held at SVB back. If they're only able to get 50% back, if the FDIC comes in and says, hey, these 10-year ultra high quality bonds, they're only worth 50 cents on the dollar. We can only give you 50% of your money back. If that happens, then worst case scenario, USDC is worth 95 cents on the dollar. Hal Press in this tweet says that the hole in the balance sheet is likely much, much smaller than that. He says after everything's said and done, it's probably only going to be around $300 million. Either way, if it's $300 million, or let's say it's a lot higher, Circle holds a lot of treasury bills and has a projected revenue from all their holdings of around $2 billion. So regardless, if it's a $300 million hole or if it's a much larger hole, filling that hole shouldn't be an issue for Circle given their revenue streams. On top of that, Circle as a company in general is valued in the billions and wouldn't have a problem raising capital based on equity in their company. And as far as all these other stablecoins that have also depegged along with USDC, a lot of them, the reason they're depegging is because they're actually backed with USDC. So obviously all the stablecoins that are backed with USDC are going to depeg when USDC depegs, but also should repeg when USDC subsequently repegs. The only real threat that I see in this situation is if we had a systematic bank failure and all the other banks that Circle holds assets at were hit as well. Remember, this kind of same scenario can happen to essentially any bank. Any bank can have a bank run scenario happen to them because they're all built on a fractional reserve system, which is why it's illegal to cause a bank run in the US, because our system is essentially built on belief and trust. And with so much fear, it's possible that we see another run on a bank and we see another meltdown process. And, potentially, I guess it is possible that we could see a situation like that. In which case, if that were to happen, according again to Hal Press, he's getting a lot of love in this video because I highly respect his opinion. If 100% of all banks that Circle banks with were to go under in the same way that SVB went under, and all those banks were only able to recover 70% of their assets. So they, again, same way they have all their assets, it still exist. They're just in other places, right? If they were only able to recover 70% of their assets, then USDC in this apocalyptic level event would be worth 93 cents on the dollar. And still, of course, would have the same path forward of using the revenue from their treasury bills to generate, enough money and enough capital to fill that hole. So in my opinion, all this fear around USDC is far overblown, and it comes from a place of people just overreacting because we just lived through the nightmare that was the collapse of USDT. People have PTSD from that, and they're just like, oh my gosh, this USDC is the next UST and it's all going to zero. And they, most people, I would say probably less than 5% of people in the crypto space actually understand how stablecoins work and actually understand that there's a massive difference between UST and USDC, which is what's kind of led the market to do really a dumb thing, which is to sell off USDC, even though fundamentally it doesn't actually make sense. So that in a nutshell is what's happening currently with USDC. I think the reaction by the market is completely overblown and that Circle is going to recover just fine. If this video was helpful, make sure to hit that like button. And if you have any questions or comments or anything to add to the conversation, let me know in the comments down below. And if you want to see more videos like this, I guess you don't want to see any more videos like this, but if you want to see more videos about crypto and investing and just following along for my journey, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a video. Thanks for watching, and I'll see you next week.